What's going on, everyone? Let's talk about the plan. And first and foremost, welcome to any new members. Trust me, we're going to go through this. It's not at all as hard as you probably think it is, and that's okay. I get it. The financial markets are intimidating, but they're made that way on purpose. Let's go ahead and take a look at this. So, what are we doing here? Or what should you do? First and foremost, relax. The most important thing to realize when joining the membership, you are not alone. Many people are confused, intimidated, and feel overwhelmed when it comes to financial markets. Did I just have an ad pop up in my PowerPoint video? What the F is that? Anyways, this membership simplifies the overwhelming feeling that you have when it comes to the markets. We're just taking a few components, putting them together, and using them in a situation where they're viable. That's literally all we're doing. So the first thing you need to do is basically F everything you've heard this year. Okay? Majority of people out there on YouTube have been doing nothing but hyping everybody up on false information to keep the music going, and at the end of the day, that doesn't pay you. So, while there's been some truth to a lot of material put out, the majority of information from the media, especially social media, and the content creators have been nothing but noise. Now, the noise began last year before this journey even began. Social media was infiltrated, Wall Street Bets was infiltrated before January events even happened. That's irrelevant. Some important tips. We do not follow the media's advice here. We analyze it and try to extract the narrative from it because there's always one in there. Whether it's Evergrande, whether it's DRS, whether there's anything like that, there's always an alternative motive behind it. And this process alone, getting that media and all these other third-party factors out of your head, will tremendously help with the psychology for this strategy. The goal here is to rely on no one but yourself. I'm going to help you get accustomed to the strategy, the mentality you need to have to execute, as timing and execution are the two most critical components of this strategy. The plays, there's a plethora of them. However, to hit them, you have to be careful and you have to make sure you follow the protocol. And by doing that, you just stick to the plan. We're doing what works. We're doing the same thing every time. This plan does work, as we have seen the past few weeks with some of the killer gains that I've seen from various members throughout the membership. And by the way, I expect this strategy to remain viable for the unforeseeable future, considering the repo demand is at all-time high. Now, what is a gap? Gaps are spaces on a chart that emerge when the price of the financial instrument significantly changes with little or no trading in between. Gaps occur unexpectedly, or not in our case. We know when they're going to come. Gaps occur unexpectedly as the perceived value of the investment changes due to underlying fundamental or technical factors. Well, right now, what do we know of that is almost a guaranteed indicator of technical or fundamental factors changing? Earnings. When does it happen that we see these gaps occur? On earnings, for the most part. Not always, but for the most part. Gaps are classified as breakaway, exhaustion, common, or continuation based on when they occur in a price pattern and what they signal. Don't worry, we're only going to be playing off one of these for the most part. The four types of gaps: you have breakaway gaps, which occur at the end of a price pattern and signal the beginning of a new trend. You have exhaustion gaps, which occur near the end of a price pattern and signal a final attempt to hit new highs or lows. So keep in mind, near the end of a price pattern. So while these two are very similar, exhaustion gaps are going to be the ones primarily we're playing off of, the ones that are near the end of a price pattern. So common gaps cannot be placed in a price pattern. They simply represent an area where the price has gapped. These are on your micro time frames. When identifying gaps to play, we're only using the daily chart. Only the daily chart to identify initial plays. Now, continuation gaps are also known as runway gaps. They occur in the middle of a price pattern and signal a rush of buyers or sellers who share a common belief in the underlying stock's future direction. These are more found on the smaller time scales. If you want to know where the price is going on a smaller time frame, you can use these gaps to help you hold and make decisions intraday. That's going to be the part that's totally on you, is your intraday decision making. No one here is going to tell you when to buy or sell. We're only going to tell you the criteria to look for to do that, and we have a great support group here that's been absolutely killing it, and that was the whole plan. Now, what causes this? The market makers have all of their liquidity and the money market funds tied up in the repo market, as well as meme stocks, allowing for a tactical approach to jump in with their algorithms, or on board, or basically jumping on the back of their algorithms and riding these corrections that are occurring market wide. If you want to see this for yourself, look at some of the plays we've been hitting. Look at Kirk, AI, Asan, SFix, just a few of our past plays, and look for the gaps we have been exploiting. Now, keep in mind, we are not playing the gap fill. That seems to be a common misunderstanding here. We're not waiting till the gap fills and then selling. We're waiting till the gap occurs and then buying. And then we sell after exploiting that original correction. Then once you exploit the original correction, then you keep it on your watch list and you watch it and you wait for another entry. You can play these plays several times because, again, think of that gap as like a gravitational pull that it's pulling that price action back up towards it. So you're always going to have, in the direction of a gap, you're always going to have more chances of that momentum up than the momentum down, or vice versa, depending on where the gap is. Now, keep in mind, you also need to check when you're looking for gaps. There may be a gap above the price or below the price, whichever one you're looking at. You need to zoom out and go back in time and make sure there's still not an unfilled gap from before. That's another critical part of this approach. So, okay, if you're still a little bit confused, beginners, this is what you do. This is the process for selecting plays. If you're a beginner, the day of earnings, look for gap ups and down. If you see a gap up, buy puts. If you see a gap down, buy calls. Now, there's obviously more criteria. So as soon as you see the gap, before you buy anything, verify max pain. This is very important. We use maximum-pain.com/options. It seems to be working very good. We're developing our own tools to get this data for the community a lot easier, but this is what we're using for the moment. Now, max pain is the adjustment spread we're playing off of. So, for example, Kirk had a price of $14 after the gap down. The max pain price was $20. So our spread was $14 to $30. So at the time of Kirk's gap, you would have wanted to buy a $13 call in the money, one at a time, scaling in slowly, and it's almost a guaranteed profit. As long as you take that profit, and as long as you buy these contracts at the right time, 9 times out of 10, you will have an opportunity to escape with profit. Now, to fill or not to fill, I'm going to explain the mechanics of why these gaps are the way they are. So what we're technically playing, the psychology and the correction that we're playing is called irrational exuberance, which is the initial spike may have been overly optimistic or pessimistic, therefore inviting a correction. In other words, they fucked up, we're exploiting it, and there's nothing wrong with that. This happens on and around earnings typically. Now the price pattern. Price patterns are used to classify gaps and can tell you if a gap will be filled or not. Exhaustion gaps, which is the ones that we're playing, are typically the most likely to be filled because they signal the end of a price trend, while continuation and breakaway gaps, the ones that are very similar but not the same, are significantly less likely to be filled since they are used to confirm the direction of a current trend. So we've been playing exhaustion gaps, and let's go ahead and take a look at what those look like. This is an example of an exhaustion gap for a puts play. This is CERN, CERN. You see here we have a somewhat of a consolidation period between 72 and 80, and then we have a nice uptrend, boom, exhausted. This is an example of an exhaustion gap. You have the RSI that's broken, you have the MACD that's broken, you have the volume extremely high compared to historical volume, and again, that is a huge overcorrection. Now, an example of a calls play. We have Kirkland here. Kirkland, again, kind of a consolidating period here. Ups, downs, ups, downs, ups, downs. Then we have one large period of down. Boom, exhausted. And we get an immediate correction. So this candle here on day one, we played off that. Look at that wick. It went all the way down here, and we played off the correction. Also, before the expiration dates we picked, we played those 3 days as well and also made money those days because, again, it went up again to max pain correct itself. And that's literally all we're doing, everyone. That's literally it. And this shit works if done properly. That's what I'm here to help you with. Come to the Discord. We have a great community. You don't have to talk. If you just want to be a fly on the wall, it will be a great benefit for you. We're building lots of tools. We have chart bots and all that good stuff coming. Yeah, and this is it's not too overwhelming. Just practice this. One contract at a time if you have to. In the money, calls or puts, depending on which side the gap is. and I will provide opportunities for you. So if you feel overwhelmed to look yourself for these plays, don't worry. I will be providing, and many others have already figured out how to do this. We'll be providing opportunities for you as well. So I appreciate everyone's support, and I'm really, really looking forward to this shit because it should be available for the unforeseeable future. So let's go.